the end of the dollar is being overthrown as a reserve currency. The BRICS are working on new currency, et cetera. The petrodollar deal is falling apart, et cetera, et cetera. And I made the point, I said, yeah, there's a lot going on and you have to pay attention to it. So that's true. But I wanted to distinguish between a payment currency or settlement currency, if you will, and a reserve currency, because they're two different things and they have two different forecasts in terms of what's going on. So what's a payment currency? Well, the payment currency is anything you want, as long as two parties agree. If I'm selling goods and services to you, and you're going to pay me for them, you can pay me in dollars. That's probably good. You can pay me in euros. What if you want to pay me in Chinese yuan or Japanese yen or Russian rubles, et cetera? Well, that's up to me. I don't have to agree to that. But if I do, send me the rubles. I'll send you the whatever it is, the oil or manufactured goods or semiconductors or whatever it is I'm selling. And if enough parties agree on that, then that becomes a payment currency. And as I say, it's just a way of keeping score. It's an important way. But when we were kids, we used to trade, baseball cards and bottle caps or whatever. And it was just a way of keeping score. So the idea that the dollar could be partially displaced as a payment currency, first of all, is happening in small ways. It's completely feasible, not hard to imagine. And there are new announcements every day. Not almost, there are new announcements every day. A lot of people know that Saudi Arabia's been talking to China about shipping oil and getting yuan, Chinese yuan. China is Saudi Arabia's biggest customer. A lot of people think it's the United States. It's not. We don't get that much oil from Saudi Arabia. China does. So those are ongoing. But the UAE, Dubai have agreed to that. They are going to take yuan for oil. President Lula da Silva of Brazil just got back from Beijing, met with Xi Jinping, and they're talking about a broad-based multilateral relationship where basically Brazilian exporters to China would get yuan and Chinese exporters to Brazil would get paid in Brazilian reais, which is their currency. And there's a lot of trade there. China buys an enormous amount of soybeans from Brazil. Brazil exports oil, sugar. They're leading aircraft manufacturers. The Embraer aircraft comes from Brazil, along with as other agricultural goods, and the soybeans probably number one. So what does Brazil buy from China? All kinds of stuff, manufactured goods, textiles, semiconductors. So there's a big, big two-way trading relationship there. And they're talking about getting out of the dollar. Same thing going on with the BRICS. What are the BRICS? Well, it's an acronym. It stands for Brazil, Russia, India, China, South Africa. South Africa is by far the smallest economy in the group, a little bit of an add-on. But Brazil, Russia, India, and China, you're talking about significantly more or close to half the population of the earth and a very significant chunk of the global GDP. I don't think it's quite half, but it's up there. So this is a major, major economic, demographic, political bloc. And what they've done recently, however, they've been meeting for like 15, 18 years at different levels. But what they've done recently, they've opened up the membership. So they don't call it BRICS anymore. They call it BRICS Plus. Who's in the plus? Well, Argentina, Turkey, Iran, again, a lot of other countries around the world. Some have applied to join, haven't been admitted yet, but they're in the process of doing that. So when you hear BRICS, don't just think of Brazil, Russia, India, and China, as big as that is. That's a big group. But all these other emerging markets are joining in, perhaps Mexico, et cetera. Now, they are working on an alternative trade currency. This would be a new currency. It would not be the Chinese yuan or the Russian ruble. It would be a BRICS dollar or a BRICS currency, whatever you want to call it. It doesn't matter. But so what's it worth? They're thinking of tying it to a basket of commodities. So you make up a basket, so many barrels of oil, so many bushels of soybeans, so many bushels of corn, so many tons of copper, et cetera. You'd have this basket. You'd use market prices to come up with a value, and then that, multiplied by the weights in the basket, that would be one, BRICS dollar, BRICS currency, if you want to call it that. And then I would pay you in that currency. You get a lot of technical problems. Who's the issuer of the currency? Are you going to create a new bank? What law will it be under? How good is the rule of law? The contract's enforceable? There are a lot of technical issues. I worked on the creation of the euro. That was authorized by a treaty the Maastricht Treaty in 1990, I believe it was 1992, 91 or 92, I think it was 92. But they didn't roll it out even at the central bank level until 1999, and then it was released as a popular currency. You could carry a €100 bill or whatever in 2000. So that took 8 or 9 years to create the ECB and work out all the details. So this is not easy, but they've been working on it for over a year, and they have a meeting later this year with the Leaders Summit in August. We're watching that very closely, very carefully, by the way. But they may be ready to announce something, so look for that. By the way, my estimate is that they're going to work on this the basket I described, the commodity basket, and they're going to kind of throw up their hands because it's difficult. Oil is not quite as fungible and generic as people think. There's 72 kinds of oil around the world based on viscosity, sulfur content, transportation costs, location, etc. Is there, and the same thing with copper and the purity and soybeans and corn and the other things I mentioned. And pretty soon you start scratching your head and saying, well, is there one commodity that's really simple that I could just use and substitute for this whole crazy basket? The answer is, of course there is. It's called gold. And that's exactly the process, by the way, that John Maynard Keynes, I mispronounced, John Maynard Keynes went through at Bretton Woods, because at Bretton Woods, he favored a new world currency. He called it the Bancor. It didn't end up that way. It ended up with the dollar as king dollar. But his proposal was that this new IMF that they were creating could issue Bancors. And then he said, what's a Bancor worth at the time? He wrote a paper going through the commodity basket construction that I just described. And then he wrote another paper. He said, forget it. Let's just go with gold. Because he realized, and you realize pretty quickly, that it's simpler, easier, more accurate. There's no dispute. Gold is gold. It's not even a molecule. It's an atom. Atomic number 79. It's either gold or it isn't. You don't have to argue about that. It's not like wheat that spoils on a ship. It's just gold. So it's not that gold's, shiny and pretty. It's that it's very, very practical as a monetary unit. So I think they'll end up there. And then that has all kinds of implications for the price of gold, which I talked to Paul Volcker about. He said, well, he wasn't in favor of going back to gold standard. He said, if you do, you're looking at gold of, $20,000, $40,000 an ounce, and not because, yippee, let's see it go up, but because that's what the price would have to be in order to support a currency, because there's so much currency around. So let's see what happens. But anyway, and there are other initiatives I could describe. So basically, all these vectors are zeroing in on the dollar from all directions, trying to push the dollar aside as a payment currency. But that's the key, payment. Now, let's talk about reserve currency. What does that mean? The reserve currency is, first of all, not really a currency because you don't keep your reserves in piles of $100 bills in the basement. You keep your reserves in securities. The main security are U.S. Treasury securities, bills, notes, bonds. We talked about that earlier in the call. So they're denominated in dollars. Treasury bills are issued in dollars, but you don't actually have dollars. What you have are securities denominated in dollars. So I'm not, so the dollar plays an important role, but when you say reserve currency, you're really talking about reserve securities denominated in a currency. So what do you need to be a reserve currency, so-called? You need a bond market. In other words, if you don't have a deep liquid bond market with a whole bunch of features, so you want securities at all maturities from, 3 weeks to 30 years. You want good liquidity. You need dealers to underwrite them, to buy them from the government and make a secondary market. You need settlement, clearance. You need depositories. You need custodians. You need repos, futures, options. You need a whole bunch of stuff, which the United States has been working on for 230 years, since Alexander Hamilton. When you look at how the Civil War was financed, well, it was financed. There was no central bank, by the way. There was no Fed or anything like it at the time of the Civil War. The Civil War, for at least the North, for the Union, was financed by a guy in Philadelphia named Jay Cooke. He was the leading investment banker at the time and the forerunner of what today we call primary dealers. And I worked for a primary dealer for 10 years, so I know a lot about what goes on behind the curtain. So that's how U.S. finance works. That's how U.S. fiscal policy works. You need all that, and we've been working on it since Alexander Hamilton and George Washington. But China doesn't have that. Russia doesn't have that. Brazil doesn't have that. All the countries we mentioned don't have that in the size and extent liquidity that you need to absorb global savings, because that's where countries put their money. That's their piggy bank. That's their savings account. Treasury bills are the only ones that are, Treasury securities are the only securities market big enough to absorb that. Yeah, the Italians have a big bond market, the Japanese do, the Germans do, not nearly as big as the US, but they have a lot of limitations there. Do you really want to pile into Japanese yen? They have a 280% debt to GDP ratio, et cetera. And then the biggest thing, I gave a long list of things you need, but the biggest thing is the rule of law. If you buy the securities, are you confident that they'll pay off? That if there's a dispute, you can go to court, you can sue. If someone claims them, you can litigate that and prove title, etc. That whole rule of law is critical. By the way, the rule of law is eroding, not because of BRICS or Russia or China or Brazil or Dubai or any of the other countries I mentioned and many others. It's eroding because of the United States. And I've said all along that other countries will not be able to destroy the role of the US dollar as a reserve currency, but we might be able to do it ourselves. In other words, the greatest enemy of the dollar is actually the US Treasury, Janet Yellen's incompetence. She has a guy, Wally Adeyemo, who's the Deputy Secretary of the Treasury. He's Mr. Sanctions. The sanctions have been overapplied, misapplied, and used to weaponize the dollar. Well, okay, you can do that. We have done it. I've warned about this for a long time. The problem is if you're on the receiving end of the sanctions, or even if you're neutral and you're watching somebody else get bashed by U.S. sanctions, how long do you want to be in dollars? You do want to wait till it's your turn, so the U.S. decides to beat you up and weaponize the dollar against you? And the answer is no. So they're working on all these alternatives, but they're not doing it because they woke up one day and said, we really got to get off under the dollar for, a lot of possible reasons. They're doing it because the U.S. has turned it into a weapon that could be aimed at them. And the U.S. doesn't even seem to realize, as I say, I've warned the Pentagon and the Treasury about this for a long time. So the bottom line is, the role of the dollar as a payment currency is definitely under assault. It's still the king dollar, but that's changing and bears watching. And the implications for the U.S. could be inflationary. People are using fewer dollars. We have to pay higher interest rates. That could be, basically you end up decreasing the value of the currency if it's less in demand, which increases prices. You need more currency to buy whatever it is you're buying, from gasoline to eggs, milk, bread, whatever. So it has an inflationary potential. We're not there yet. The role of the dollar as a reserve currency seems secure for the time being, not because everyone loves it, but because there really is no alternative. But that could change over a longer period of time. So we'll see.